Welcome to TradeTheNBI.com. This is John's reports for the 18th. Tomorrow's Grace's birthday, so it's exciting for her. But the market doing exactly what we expected. We didn't expect it to hold supports. The Nasdaq was clearly the weaker of the two, but NBI White was breaking above the magenta, and that was clear. The difference we have between the Nasdaq and the S&P is clearly the DOC. Here you have the orange DOC outside of the range between cyan and red, which is usually continuation. And that's what we have on the NASDAQ, and we'll look at that in a second here, and that will clearly show the differential. But um, moving to negative shakeout was what we were watching for, and haven't quite dipped below the red line here from an extreme histogram. When that happens, then you'd be in a far more dispersion. It's still going to be tough for them to break past now the 50% resistance and hold that, particularly with the NBI white lead. So we'll see intraday how that plays out. But that's the situation. Here's what we were talking about. When orange is caught between cyan and red, you get a continuation mode. The shakeout has been negative for well over a week plus, and far weaker from that gold rising. And here you do have that clear NBI dip below the red line, and that's an indication that sports won't hold, and you're going to keep diving, and that's exactly what the Nasdaq has done relative to the S&P. So it's weighted everything down. And not surprising. I mean, it's just what the numbers we're getting from economic readings and just the lack of impetus. And of course, this all gets reflected back on oil, energy costs, and that Fed not doing enough. Fed shown right there in TLT. From an oil standpoint, slight bounce back, but still it's at the bottom side of the range. Helpful, but way too late. It's not going to have any impact until the following year. The war is going to continue. It looks like nobody's anywhere near peace, so that's going to help the euro, but they're going to have trouble stealing the money from Russia, Belgium, and I'm really not interested in being on the hook for what the Russians might do when they do that. And of course, as I said, gold will push its way towards the peak, and it's already doing that, so no shock. The fade in Bitcoin really causing a lot of people to be panicked, but this is pretty much holding in there, still within that negative range. You've utilized your short-term buyers pretty much to the peak, and that shakeout just tells you it's not ready to change anytime soon. You get the likewise situation, slightly improved from a ETH standpoint, uh, but they're rolling out their ETFs using it. And this is what we saw from the intraday. So we had the NBI white spike in the short cover rally. Well, we know what's going to happen at that point. As soon as the magenta breaks back below that 33, you're going to go to the 0%. That's exactly what it did. The NBI white stayed in there, and that led to continuation of new lows going through. Clean, simple, doesn't really require a whole lot of thought and effort in that standpoint. It's fairly clean. And we look at it from an intraday, it was just selling all the way through. So all the call buyers that got caught into there were just pretty much eliminated. That's exactly what the option guys love to do. From a European standpoint, right now things are improved, but it's just trying to pull back from where we were before. And so that'll take care of some of the put buyers that bought in late, and you do the same thing back and forth. But the weakness is still inherent in the setup, and it's going to make some sad Christmas rally people, not as thrilled as they could be, but hardly horrible in any way, shape, or form. So that's the long and short of it. Anything relevant, I'll put it on the team chat. Have a good one. Trade well.